Good morning, boys and girls, ladies and gents. Welcome to the Flow Show, Wednesday, 16th of April, Bank of Canada Day, amongst whatever else going to get thrown at us, as usual. Morning, Mr. K.
Good morning, everybody. Good morning, Ryan. How are we doing this morning?
Yeah, all good. Sun's out. It was raining this morning, but much needed for my garden, but the sun's out now. It's always a nicer place when the sun's out. How's it going over there in sunny Dorchester?
Yep, same here. We're not too far away from each other. Sun is out, but yeah, had that little bit of rain to soften up the soil a bit. Is this a gardening program, or are we talking, markets? Hey, maybe we should do one just to surprise our audience and to keep things a bit light. Maybe we should do a gardening flow show one.
Yeah, yeah, definitely. We can take photos of our respective gardens and have a little chat about that. Yeah, gardening with the Flow Show. There you go, a new feature coming soon. Right, let's get back to what we're really here for. Looking at what's going on. Paul Nashi, should he be pruning his roses now? You can prune your roses whenever you like, mate. Yeah, I don't think there's a particular time for pruning your roses. Just be careful what you prune, though. You don't want to lop something off that you need to keep. Right, anyway, let's get stuck into it. Going to kick off with a bit of data out of China. No real surprise here. GDP numbers for Q1, year on year, coming in above expectations, 5.4%. So that's there or thereabouts, the target that China wants. Quarter on quarter, seasonally adjusted numbers, though, maybe a little bit softer than expected at 1.2%. Maybe they should have been a bit higher given the front running that has been going on over there. But these are some of the first numbers, so maybe some stuff still to filter through. Otherwise, it's all pretty green amongst the other stuff. Investments up nicely. Industrial production was higher. Retail sales was up. Even the unemployment rate was better. So some green shoots in China over there at the moment. Again, we don't know how much of that is domestically led or export led, although the Stats Bureau said that the domestic economy was picking up a touch. So maybe there is some stuff going on the ground. But as I said, with all this trade stuff going on, I don't know how to read those numbers or take them, whether they're real or not for the moment. They could be a bit skewed. China's Security Journal, which is a bit of a mouthpiece for the state, said China will ease monetary policy when needed. Just a reminder that we've got the LPR rate announcement coming up on Sunday. So we'll get to see whether they decide to start cutting rates again then. According to the Finance Ministry, they're also going to begin their ultra-long special sovereign bond issuance on the 24th of April. So that might be worth half a look just to see what the take-up is like with that. Over in Japan, a bit of data out from there as well. If I can find it, there we go. We've had the Tankan Index for April, which took a bit of a battering last month, dropping to -1. It's now back up to +9. The non-manufacturing index also jumped to 30 from 25 in March. For a few months ahead, the manufacturers index is seen as at 0 around July. So that's a bit of a flat number coming in there. But overall, again, data showing a bit of improvement. However, the Bank of Japan, and particularly Mr. Ueda, is getting a little bit panicky over what's going on with US policy. He said last night that they may need a policy response if US tariffs weigh on Japan's economy. He will decide appropriately based on developments, says we'll scrutinise US tariff impact on the Japanese economy without preconception, says confidence has already been affected. Said that the US tariff risks is moving towards the bad scenario the BOJ envisioned since February. Says domestic food inflation is seeing easing and real wages are to turn positive mid-year, but sees both upside and downside risks to the price outlook. We've also had a Reuters piece this morning saying that the BOJ is going to cut their growth forecasts as the economy gets bitten by these US tariffs. All in all, Kay, he takes 2 steps forward and 3 steps back when it comes to building a case for rate hikes. Looks like we're definitely getting a pause at the next meeting and maybe there one after. But do you think they could actually turn more dovish?
Pausing. Yeah, I still want to see what's happening on those tariff negotiations, but it does seem like the balance is gradually shifting towards a pause now, and a lot of analysts are expecting the same. Well, as I said, I mean, probably the balance has now shifted where I was really thinking the past weeks before really the all those blanket tariffs and those big meetings were scheduled and stuff. I thought the 1st of May, new fiscal year. It's the wages talks were going all right, so there was a fair chance of them doing something. But all of this uncertainty in markets and in growth expectations may indeed put them on the pause line. They also Bank of Japan. Well, we had historically, obviously, we had surprises. We also even had one no later than the end of last year when Ueda did hike when the market thought that they were going to pause. But traditionally, when the markets are in this kind of state where they are now, where nobody knows what the next move in bond markets is going to be. Equity markets a bit on the uncertain side as well. They don't really like it, and Bank of Japan may indeed be tempted to pause and sit it out a bit longer. So yeah, I think we need to shift or me at least, my expectations a bit for the Bank of Japan. But still, I want to see what's coming out of those negotiations with the US. Well, letting if they would come in with a deal to supposedly let the yen strengthen, it may already be a tightening of a hidden tightening of policy. So maybe that would even more hint at a pause. But yeah, I don't. Yeah, I want to see before really saying I'm on the one or the other side now. But I mean, at least my high expectations have been reduced.
Oh, you disappeared, mate.
Hmm?
You disappeared there.
No, I'm still here.
Oh, you still there? Okay. Oh, sorry. I thought you would keep
I
talking.
didn't see any problems with my microphone. No.
Okay, no worries.
Yeah.
So going back to what deal? If I wouldn't say it would be a deal, but talking about FX, the US and Japan, what is the likely outcome? I mean, Japan's not going to turn around and say we're going to take dollar yen to a level. It's the likelihood is probably that we're going to get an agreement that the US recognises that that Japan only intervenes when there's too much volatility. So, is there going to be any real change in
Well, I mean that
FX?
I don't think there would be a pact. We would have been trading at 160. Things may have been different, but there is several things that are possible here. That the market, where they get a deal on on tariffs, and if the US wants to link it to the FX, they may say do not intervene when the yen weakens, strengthens a lot. But I still think that Japan will, as they have been doing historically, tell the Treasury that they only intervene in the extreme cases. And yeah, I don't really see them like slapping hands together and say like, okay, let's strengthen the yen. But the market can do obviously the job for them if they link it to a non-tariff deal and go on to, and I think, if I recall correctly, or have those quotas been completely abolished, that they may have some sort of quota on imports on cars and things like that. That happened already back in the 90s, when there was a big row about Japanese auto imports into the US. That could be one, but it should be yen supportive if they find a deal, because that was what the original idea was before the whole tariff thing started. That having or keeping Japan as a very close ally, it should be supportive yen, in some form. But I'm a bit afraid, and I think we spoke about that yesterday already, that the market will get carried away, maybe put the dollar yen at 137, 135 from where we are now, assuming that we go into the meetings where we are now, of course.
Yeah.
Put the yen 5% higher, and then you see an absolute, a very big wave to the other side if Japan just continues to keep the same line on FX interventions. And I'm a bit worried that a move like that, or I'm getting prepared for a potential move like in that way, to be honest. The thing is, if you look at how US is acting against China, obviously China, the line with Korea, the North Korea, the line with trace that line well into Russia, they will still, I reckon, they are still going to need Japan to be some kind of a buffer. And now, since we heard the Koreans also going over there, the South Koreans, they may want to have this buffer, or at least outpost actually on the other side of the Pacific to counter anything Chinese.
Yeah, I get that. So I think I'm getting along the same lines as you. If we get a big dip in dollar yen, that might be something worth looking at for potential turnaround. But we'll see when it happens and all the dust settles and we get all the headlines. Right, coming over to the UK this morning, and we had some inflation data out, and inflation coming down a pinch. Headline CPI at 2.6%, down from the 2.8, lower than the 2.7 expected. The core number as well, easing a pip to 3.4% as expected too. RPI data as well coming in lower. I can't see the PPI data on there, but it's probably part of the fuck up that's going on at the ONS at the moment. That data's all screwed up as well. So take that all with a pinch of salt. Anyway, it is softer inflation, a bit of a relief for the BOE. Whether that lasts or not remains to be seen. We're now seeing, or markets now seeing, 86 basis points of cuts by year end and an 85% chance of a cut at the May meeting. US data yesterday, not an awful lot out, but we had the Empire State number, manufacturing, coming in at minus 8.1, so slightly less crappy than the minus 12.8 expected. Still an improvement on the minus 20 from the month before. New orders was still negative, minus 8.8 versus minus 14.9 previously. Employment, that was still negative, but less so, down 2.6 points versus down 4.1 points previously. But yet again, another regional survey showing price increases. Prices paid jumped to 50.8 from 44.9. Prices received also up 28.7 from 22.4. Expectations for the next 6 months, though, taking a dive, down 7.4 points versus a prior plus 12.7. So as I say, again, another regional survey showing a few wobbles, but prices still increasing, and that's the fear that the Fed has got at the moment. We also got Canada data out, CPI data, which showed some decent falls actually. Year on year, CPI coming in at 2.3%. The Bank of Canada core dropping to 2.2 from 2.7, and all the other 1,000 measures that they try and calculate also coming in lower too. Trimmed mean, this, that, and the other. So maybe a bit of surprise, or again, maybe a bit too early to see any tariff bites hitting prices in Canada, but that's some relief for the Bank of Canada anyway. I don't think it swings the needle for today myself, but you never know with those guys. It's probably 50-50 whether they cut or whether they pause. Has that data changed your thoughts about the BOC, Kate?
Not really. Not really. Yeah, we're still in likely hold, but potential cut. I mean, it could take them over the edge, but it's not like dropping like a stone, right? Yeah, you are on the chart there of the evolution. Still kind of leaning towards a hold today, but if they would surprise, and go like, okay, we need to give a helping hand to the government, who are supporting our several sectors. It may take them over the edge, as we all know. I mean, central banks are independent, but only up to a certain point, right?
Yeah, and Canada, new government, or Carney and his crew, as Kay says, have announced new support for businesses that have been affected by tariffs, and they're slowly going through the sectors, offering support there. Automakers, numbers coming up soon, perhaps. So that is some early fiscal measures, shall we say, to try and deal with the effect of these tariffs. Right, while we're on the trade guff, EU spokesperson says the EU needs an additional level of engagement by the US to keep trades talking. We had Sefcovic, the EU Trade Commissioner, over there, and while we had headlines early yesterday that things were looking positive, it seems like we're still a long way for a deal on that side of things. White House Press Secretary Leavitt says we believe we can announce some trade deals very soon. Says Trump has said that the ball is in China's court, which is not how China sees things, if their recent comments are to be believed. They've repeated some comments that China is open to talks if Trump shows respect. They also want to name a US to name a point person, as they're calling it, someone who's going to be dealing with this stuff all the time rather than chucking it around the cabinet and various members. For Mexico, the Mexican peso, Trump says we want to help shine bomb and Mexico on the cartels, and that we're getting along well with Mexico's PM. So some good news there potentially for Mexico, and as I said, the Mexican peso. Nvidia, not often one to talk about stocks, but Nvidia in a bit of hot water because although they've announced all this investment and they're going to build US chips and supercomputers and whatever, they're apparently going to take a 5.5 billion hit in Q1 2026 due to this new blockage, shall we say, on H2O chip products, new licenses required. And they're in hot water because they didn't tell their customers about this notice when they first heard it. So although they might be looking to make big bucks in the US with new plants and chips and whatever, they're also taking a bit of a kick in the nuts with that 5.5 billion charge. Anyway, that's for them to deal with. Russia's Kremlin, talking about the Ukraine stuff, said about US and Russia talks around a possible Ukraine settlement. Says it won't talk about a precise time frame for now. Says there is no clear outline for a deal, but there is a political will to move in the direction of an agreement. So that's still ticking on and on and on. One bit of good news, depends on your viewpoint, from this tariff stuff, is that Temu is going to be slashing its advertising spend at Google and Meta. So all those poxy Temu ads you see all over Google for packets of pencils for 20p, you might be seeing less of those. Basically, it pissed me off anyway. So good news on that front. Right, anything else, Kate?
No, I think we covered most of it. I'm just thinking when you said like the EU is going to put like a one person to deal with all this, bring back Michel Barnier. He was so good during Brexit. Could now deal with the US.
Oh dear, yeah. I don't know what's happened to him. He was in French politics, wasn't he, for about
Yeah.
5 minutes?
Oh, yeah. He's even been prime
Wasn't he the
minister
prime minister?
for a while, right? But now there's rumors flying around that he will even go for put his hat in the ring for the presidency in a couple of years. So he's never far away from the scene, you know.
No, exactly. Oh, good old Barney, eh? Anyway, I'll move on before I start ranting about him as well. Right, I'm going to start with Ali and your comment, mate. Just talking about trading now at this moment. You take a position, everything is on the right track, and then sudden news comes and the market goes from one side to the other. Um, you've you've highlighted the problem, so you should know the answer. We are in markets that are swinging around very, very fast. I wrote this morning in our chat room that it was looking like we might be getting a break of 142 because the bounces have been very weak and we kept coming back and we were glued to this level all morning. And then we get a couple of headlines and here we are up testing 143. This is markets at the moment. Okay. So as traders, you need to identify what's going on. You need to identify the volatility, know that there's volatility, and you need to adjust your trading to it. Okay, and how you adjust your trading to it is you account for the volatility. So my view of trading now, how I'm looking to trade is I'm not going to pick a level, okay, and just park my entry there and have a 20, 30 pip stop. Okay, I'm going to potentially split my trade up, widen the boundaries. If that means reducing the size, so I can have the same amount of risk, but over a wider pip area, then that's what I'll do. So you don't need to change your risk amounts. You just have to change how you spread that risk over the market. If you've got volatile markets, then it makes sense to do a couple of things. Scale into trades. So rather than pick one number, and I did that a bit in Euro Swiss yesterday, looking at that one. 92 is the big level, but we never quite got down there. So I started scaling in small little pieces. I've got the same amount of risk, but I've just got a wider stop on it now. So I've got smaller entries. I might not get all the entries, but I've got much more. I'm trying to encompass the volatility. It won't always work. If we get a big wild move and it drops 100 pips, then I'll get stopped out. But you've got to adjust for the conditions. Okay. And Ali, you've identified the problem. You should know by now what the solution is. Okay. So the way to do it is go a bit wider. Keep the same risk if that's what you want, but cut your trade size, go a bit wider, allow for those possible swings where you might get knocked out. So if you were using 20, 25 pip stops on your trades now, reduce your position, go 30, 40, 50 pip stops for the same risk. And that's how you can try and trade through the volatility. Kay, you got any advice on that sort of thing?
Well, no, it's that's it. I mean, and don't go. Um, I would be tempted to look at big levels, but if you go in between levels, don't go for big breaks because we know that headlines can drag it around. Like for instance, well, let's stick to that dollar yen, 142, 141 three quarters is support. Okay, if it breaks 141.70, you can try to accompany, but don't put too many eggs in that basket because we have seen pretty big reversals. And I'm thinking about stuff like the Aussie, the Kiwi, for instance, who were on the way down, and they reversed pretty hard as well. And also when you are in profit, this is something e- especially in kind of markets like we are now, where a headline can reverse the current market direction, is that take profits when you, for instance, are short, I don't know, here 142.80 in the dollar yen, and it drops down to 142 105. You know that the 140, 170, 142 is a bit of a zone. Take partial profits, and then your risk will be reduced. If it breaks, you're still in the trade. You can break trade again. We, as FX traders, what we need to be very positive about, especially when we trade our own book, is that we have all the reins for our trading in hand. We decide when you walk out, when you go into a trade, when you get out of a trade, when you get out of partials, we can decide upon everything. The market is moving as it is, but no one else decides for you, right? No one. I mean, no, we can talk about stuff here, Ryan and I, and we can be completely out of court because there's a headline or two coming out during the show or right after the show, and but we can also be completely right. But it's not because we are saying something or whoever is saying something that you need to do exactly that and bank on. Oh yes, if three of us think the same thing, this is going to happen. This is not how the market happens now. So you are the one just directing your own book. And the way I'm trading right now is really, people in the room know. Okay, I've got a few themes in my mind, and that's the way I'm trading right now. But I do take profits. If it goes in my way, fine. My account will be happy if I take partial profits. If I am still in the direction of the market, even if it's smaller, I'm still fine because my brain is relaxed because I have the right side of the market. But I am trading around. So I mean, but those decisions are just up to each individual in those markets. You can look at, and I've seen analysis, and you look at all the social media, and or you look at things on TradingView, for instance. You can follow people. There's for one currency pair, there's 100 different pictures and 100 different levels, but in the end, it is you who make the decisions, okay? And that is something I think you need to embrace the positivity in that no one else can force you to do anything at all. And that is the way I think you're going to become. You listen to what people say, you learn about people who do the right thing, and if we look around in our community, I must say there's a lot of people doing right things. We are doing most of the time the right things, but at the end of the day, this is your basis, and then you make your own decisions. You are the one who presses the buttons.
Yeah, absolutely, 100%, mate. It's, we're trading fast markets. You've got to react faster, and you've got to be ready to react faster. That's the main thing. 3-4 weeks ago, you get in the trade. It takes an hour to move 20 pips. You take a bit of profit. You sit back. You kick your feet up. There's low volatility. You've got time to look at the market. But now you could get in a trade, and a second later, wallop. You get a headline your way. You've got 30-40 pips in the bank. You've got to react to that quickly because it can disappear just as quickly. So if markets are trading quickly, you've got to learn to be able to react quicker as well. And it's just a mindset thing. Adjust to the conditions. And if things calm down, volatility drops, then you just adjust back a bit. But the price action will tell you that. If Aussie dollar's pinging around 30-40 pip clips, now's not the time to put your feet up. You've got to be at your screen. You've got to be watching. So yeah, just react quicker if markets are faster. But anyway, dollar yen, while I'm here, it is looking like another solid hold for now down at this level. But how far we can bounce to is another question. We're already struggling into 143, 144. 20 is another area, then obviously 145 is a big one as well. So watch the rallies on this one. If we continue this little mini series of lower highs, that's going to put an awful lot of pressure on here. And the likelihood is that if we do break that level, it's potentially going to be a bit of a runner. And it is a pretty decent level. We've had several tries below. We've knocked down quite far, but we haven't stayed there for long. So if you get a break and hold under this 141.70, 142 area, and it looks like it's starting to hold, then we're probably going to be heading much lower. My eyeballs are on the 138 level. That's another biggie. you know, up like the 145s, the 147s, those sort of levels. So that's the sort of one that I might, depending on why we're going there, I might try a little counter trade just as it's a big level. But yeah, otherwise just keep an eye on it. Dollar CAD, that one's playing between the lines as well. I had to scratch an itch. Everyone was, well, a few of us were talking about not being as dollar bearish as some of the market. And I've been speaking about this line here, 138.66, and whether after the CPI, which side of it we were going to be. Well, we got above it and we started holding it. I took a little long and managed to get some off. But what do? We get to the next big level, 139.76, 77. Hit it on the head. We've done that before after this breakdown, and now we're coming back down again, and we're probably going to tread water until the Bank of Canada. Just give you a heads up why I've got that line in there, because it was that high there, and it was a traffic area through these big spike highs as well. So it's an old historical level. Didn't do much on the way down, but it's had prior action there. So no surprise to see it running into trouble there as well. Had a look at that one. I'm not really looking at much. Okay, what's going on dollar China? I'm all flat now, but are they going to allow this to win? I've seen the fixes. They've let those go a little bit. We're doing 721s now, but are they going to mess with this, or they just
slow grind? I think they slow grind, but I don't think a lot has changed. But the market had to give up on the big break ID. Because the Chinese officials came online with those lines saying that they asked their banks not to buy too many dollars. I haven't given up on the idea that they may slowly let it go, but it's all going to depend on time as well. The longer it lasts between call it simply Trump and Xi getting on the phone, the more I think there is still the possibility that we are going for a walk back higher. But the market seems to now be in the kind of mood where they say they are going to pick up that phone sooner rather than later. So we may have to wait until those US-Japan talks, by the way, because Japanese being also an Asian country, it may some things may not depend on them, but the timeline, you know, they've let's get our stuff with Japan sorted out first, and potentially South Korea, and then we'll handle China. Yeah, I did buy it, but then I've let it go because there is some chance that they pick up that phone, you know. And again, we are trading below those 737, 738 levels. Perhaps it's just worthwhile waiting for a decent break to get in again if that is still the way. But I do think for now it's kind of a deep buyer, but I'd love to get it rather under 730 than to buy right here.
Yeah, and this Trump China stuff, it seems like China's playing more hardball this time. They're calling his bluff
Yeah.
a bit more. Do you think they're keeping the currency in the back pocket in terms of using it as a tool against tariffs and whatnot, rather than letting it go now? They're going to keep that unless things get really, really bad.
No, I think but okay, before I give an answer to that, there is a difference between the dollar CNY and the dollar CNH. Okay, I mean the dollar CNH is a speculative currency. It is okay. They direct it too, but if they let something go, we need to watch really the dollar CNY because that is where they're going to hint at higher fixings, like they did overnight, injecting liquidity. Maybe a touch on the LPR rates over the upcoming weekend. So the thing is, we need to differentiate those two. But if they let the CNY go, the CNH will be an accelerated one, right? But right now, I think they are indeed keeping it behind the hand, but also I think they are looking for ways to cheapen perhaps up the CNY, CNH or so, but they will still trade with other countries like Europe. Europe is for instance not on board with doing all trades in CNH, right? If that would be the case, then you would see dollar CNH below 7. But for now, I think they may want to steer it lower because they want to also attract or increase, and we have seen it already for in Europe, for instance, increase the business ex US, right? So
Yeah.
they're for sure not going to let it strengthen too much right now.
Yeah.
Um, that is where I am now, and so I am still in the camp of they will let it slip gradually, and so we have to continue to monitor those interest rates, those fixings, whatever liquidity they inject in the system. The thing is, if they let water down their finances too much, then that is not the right thing for investors as well. So that's another issue that we need to talk about because they want to, or to keep in mind rather, because they want to attract fresh investors in their markets to drag them away from the US uh, not hegemony, but the US importance, right? So I mean, there's a lot at play, but if I put everything into the scale, I still think that they will let it slip, not drop, but slip. But I mean, the confidence of it is perhaps a little less now than when we were trading at 741 because I even wrote in our room then I said like imagine they just let it slip to where the dollar Hong Kong peg is 780 would be something realistic if they let the CNY CNH slip.
Yeah, absolutely. I think for this one, if we're seeing another break above this 737.38 highs and it's holding, then we're probably off to the races with that one as well. It was funny you mentioned Hong Kong because they came out last night and basically stuck two fingers up at tariffs, saying they're not going to, their postal service is not going to deal with anything heading to the US, and they're not going to collect tariffs on behalf of the US either. So up yours, basically. So
Mhm.
yeah, keep an eye on Hong Kong as well. Right, okay, I'm going to bounce it over to you. I don't know if you've got the South African stock market on your charts, but Freddie wants to have a look at that.
Oops. No, I don't. I I really don't know. I just want to perhaps reply to Ali because he had a question about the Aussie, and obviously we are watching all those markets, and the Aussie is one that is quite hot on the list of currencies that we are monitoring in our room. Every time we get close to that 63.90, 64.15, we're seeing the hesitance of the Aussie right now, okay? But as we've been talking about those currencies already a fair bit, it is still trading on the China bandwagon, as we see actually this morning, the Aussie, well, since there has been those kind of rumors about China-US discussion, we see the Chinese yuan strengthen just a tad, and the Aussie is 20 pips higher. But would still say we need to break that 63.90, 64.15 zone to really get going. If that gets going, then I think we may be up in the 65s pretty rapidly. For instance, around this 65 and a half here. But for as long as it doesn't happen, we have seen those tries and again and again. It does hang a little closer than what we have seen in the past, because every time we run up in the past, we had quick rejections. Um, Now it's trying, so it's possible that we finally go and have like a thorough test and perhaps go higher. But until it happens, I'm still not it's still not my favorite. I still prefer between the two this one, which is a kiwi, is still looking healthier. Especially now that we have a pretty decent level here, around 58, 85, 90. That thing has, as we can see, already gone back up into this prior zone. So it looking a bit healthier than the Aussie dollar right now. Um, Obviously, if we start to get back below 58, 85, 90, bit of a failure, and then we can correct deeper. But it's looking a bit healthier still than the Aussie. This is just my personal view there. Um, Voila for those two. Now, I really don't know what to say about. Who is it asking about the South African rand?
Frederick.
Frederick, I didn't see that. Look, I'm going to have a look at it, Frederick, and could you have a quick look comment on the South African stock market? Has it recovered all of the downturn and seem to be, if you find it interesting? Look, I'm going to have a look at it for you, okay? And we can talk about it. I'm going to make a note of it. We can talk about it tomorrow. Um, there's there's always a lot in general. There's always a lot going on in South Africa. Whether it be from well, a lot of it is political, of course. But whether it be from the economic side, whether it be from the Eskom side. So perhaps there is a bit of a potentially better outlook on the Eskom side of things. I haven't really looked too deep into it right now, but I'll make a note of it and have a look at it tomorrow. What I did see is that we broke higher pretty severely because South African rand is part of the BRICS, right? But also come back quite hard because of extra tariffs not being putting on, perhaps, as I said, a bit of a better outlook. It is going to move around, I think, as well with all things China, because we know that it's got a lot closer to Russia and China over the past years, right? So, but I haven't seen anything particular in the why we would be at all-time highs in the top 40 there. So I'll have a look at that.
Yeah, I just looked. It just had the 15% drop over all that tariff stuff, and then it's reversed all the way back up again.
Yeah,
Yeah, SA40.
yeah,
Yeah, lot
yeah,
of volatility. Looks like Bitcoin.
yeah. Well, I mean, it's still an emerging market, right? Yeah, gold there is don't change a winning team unless we are going to see, and I'm just repeating what I've been saying like virtually every day, unless we see a resolution of tariffs issues, etc. There's very little reason for it to come down, right? And also I think there is a flow, still flows going on. Imagine that there is some truth in um, China letting go some of its US Treasury, and I think it's a lot less than what the market is thinking, by the way. But imagine also, or recall that Chinese officials said like, don't buy too many dollars. So if you are at a Chinese one of the Chinese submarines or Chinese local bigger banks, and also just the public and those regionals or Japanese Chinese companies, for instance, if you can't buy dollars, or if you don't want to buy dollars and say I don't want to be seen as being overly buying dollars. What else do you buy? Well, we've seen it overnight again. You buy gold, right? And that is still the thing that those people, I think, are piling into, together with other central banks, with other hedges against all bad things that's going on in this world. So we're still there. So I think the next level, if we continue to go, is 33 3/4 around there. We just are trading just above this this little extension here, where I said in the prior days to get deeper retracements, we have to go below 3165.70 again. We never even got there. So now I would raise this level to around 3200 perhaps. Which we could see if you break back under 32.5, 32.45, we could see that quick run down to 3200, but then watch closely what's going on there, because we have been consolidating in very high levels and then continue to fly. To me, unless I see a real solution to whatever goes on in the trade in this world, and there is a decent prospect for a better global outlook of the global state of the economy. I mean, I have to wait for this to really start to say like, okay, this is enough, and I want to go short. I'm not trading this one short right now. So that is it. Blow off top, Arif. I think we have done those 150 bucks quite regularly. Is it a blow off top? I You know what? I'm going to be very honest with you. I am not talking about those kind of things, because I've been a bank trader. I think we have seen crisis trading. We have seen everything happening, blow off tops and things like that. Or I leave that to the technical wizards to tell the people whether it's a blow off top and we are going to come back down. Yeah, where is the blow off top if you look at these kind of moves, right? It's been going on for a number of years, so I'm not going to call this one. I'm looking at the time, and I think for today I'm going to leave it there, Ryan. We could talk about everything, but just looking at the time, back over to you, mate.
Yeah, thank you very much, mate. Great stuff as always. And we'll call it a day there as well. Do join us later on Face. Don't forget also to take advantage of the offer that we've got going on at the moment. 40% off our monthly subscriptions. So take advantage of that. It's not going to last for long. Get yourselves in our community where you can get this sort of analysis and speak to us all day, every day when we're not on holiday. And yeah, so you can get it small on a one-to-one basis. So everyone in the chat room. Anyway, have a great day, everybody. Trade safe, and we'll see you tomorrow.